Good morning and welcome back to the Opportunistic Trader for December 24th, the half a day before Christmas. I wish everybody a very happy holiday and a happy new year for people that are trading today, which doesn't seem like a ton of people. The market is a bit lower. It actually was 30 lower when I was picking up my breakfast this morning. Got out of my breakfast and we were down one, and now I'm back in the office and we're down nine. Interestingly, the stocks are much weaker again than the futures. So Amazon's down 30, Google down 10, Netflix down 3, Facebook down a buck and a half, Apple down a buck and a half. Goldman Sachs was down about 250. It's down 150. Citi down 75. So the banks are down about 1% to 1.5% across the board. The FANG names are down a little under 1% to 2.5%. And somehow the S&P came back 10 handles. It's going to be very light. We spoke a little before we came on the air. We talked about the plunge protection team again coming in. The only problem is I don't know how good that team is. They got Minuch on it, who's flip-flopping left and right on everything that was said over the weekend. What's interesting for me, the takeaway is that Mnuchin called all the banks, or they claim he called the banks.
Yes.
Why is he calling the banks when the market is at no way looking like it's in crash mode or in a mode where it's unorderly and illiquid? That would be
May I
a time.
inject a possibility?
Sure.
Okay. Put on your tinfoil hat. So this is clearly conjecture, almost speculation. But if everyone understands that the Fed is independent, and we're not going to emphasize the word independent for there, that means it's comprised of people that are related to or tied to banks. I'm not being paranoid here. It's just the way the Fed is set up. Look it up from the charter. I'm not speaking to you in that tone. I'm just saying, hey folks, look it up. This is what the Fed's about. Now, Trump, who has unfortunately, for good and bad, tied himself to the stock market as opposed to the economy, uh, uh, has presided over a Fed that's raised rates, which he thinks is inappropriate. Now, he has just been all over this, but I think he's kind of exhausted his own bad cop ability, and he's run into some trouble. And by that, I mean he needs someone else to do the work for him. So Mnuchin is meeting with bank CEOs. To your point, what do they have to do with it? Well, I think the banks are the ones that can indirectly exert influence over the Fed. To speak with to put it in a sentence, Mnuchin is speaking with. I love the name Mnuchin. It's like minutia. Mnuchin is speaking with bank CEOs about liquidity. That's a euphemism for, dude, don't you want more liquidity? Can't you influence the Fed to lower rates? I mean, isn't he doing a good cop thing that way, Larry? I mean, is that a crazy? I'm not saying you have to agree with it, but that's not a crazy idea if you want to
No,
influence.
I'm not stating whether it's crazy or not. It's a surprising idea.
Well, I think hasn't he backed himself in the corner though? I mean, what I mean by that, Trump, and this is not a negative statement on him, but he has tied himself to the stock market, as you noted, in the past versus the economy. And when you tie yourself to the stock market, as no president really has before that, you take great risk. I mean, it's aggressive. I'll tip my hat to a guy who can tie himself to a more volatile asset than the underlying economy. But that's a double-edged sword. And now he had successfully blamed it on Powell for the first leg lower. But since that tariff man tweet, which has nothing to do with the Fed, we're down 13% in 13 sessions. So he's in a corner, I think.
I think he's a lot worse than that.
Okay, he's in a corner with dogs on leashes that are about to be unleashed on him.
I don't know, but he's in cold Washington instead of Mar-a-Lago, hobnobbing with his membership there, and his family is there. So I don't think he's very pleased, and I don't think this is ending anytime soon. They're not. If the Democrats hold out,
the Powell's bias
Uh,
in terms of rate hikes?
I'm talking about getting the government shutdown wrapped
Oh,
up.
well, I agree with you. And Mike and I talked about that off the air. I mean, January 3rd at least, right? I mean,
Well, I'd say if we go to January 5th or 8th or whenever they turn over the House, then he's finished anyway. So the bottom line is this is going on. I'm surprised that the market is not much more skittish at this point. I think because it's a half-day holiday that they're holding the market in.
right.
But overall, the markets do not really look too good here. We'll see if we trade that low again, but the stocks look again worse than the futures at this point that I see. So I think if we open here, the futures will probably head a bit lower. Volatility's up 3% at 31, which is really, I thought about it over the weekend. It's an interesting, we're at an interesting level. We're at a level where you really can't stay. You can't stay at a 30 vol. You're either going to be under 20 or above 50. So one of
Right.
those two things is happening. You're not coming in for weeks and months at a time to a 30 vol. It just,
It's
I've
like
been
gold
doing
hates
it.
the teens. I don't really ever see VIX stay in the 30s.
Right.
You're
Well,
right.
I've been doing it for 30 plus years, and we didn't have the actual VIX, but we had the straddles, and the straddles would price, and we could never sustain a 30 vol. So one of two things is going to happen. There's going to be a market whoosh where volatility ticks up to 40, 50, maybe even higher. I don't expect that, but it's not sitting at 30. It can't. The machines
Right.
can't handle it, and pretty much the people can, because there's not a lot of people anymore. The people that are left are pretty professional. But I will give a little weekend talk. Every single person I ran into was freaking out about the stock market, and it's not really down per se. The market's down less than 10 for the year, but that's not where people are getting hurt. They're getting hurt in individual names. Everybody owns Apple. Everybody
Right.
owns that thing. Oh, and
Right.
it's not down a lot on the year, but it's certainly down $75. Actually, over that, it's down $80+ from the high.
Right. So I'm just thinking about this because I didn't think about this before, but that's actually a good point. The S&P 500 may be down X. The Nasdaq may be down X. But the average person's portfolio, like many hedge funds, is heavily overweighted in names that are down more than X, 2 times X, 1.5 times.
And then
X.
I'll interject this. All of these people that are running people's money, like I'll mention, I really want to sort of not name names or give it away, but a family member of mine has managed money somewhere. He doesn't have any idea what he has. Zero.
Which of your children is this?
This is not my children. This is an actual major adult in the business world. And what's amazing
kidding,
about it is his guy is a buy the dip guy. So
Right.
where were you buying the dip in Nvidia? It went down from 290. It's trading 125 from 290. I don't think I've ever seen anything like that. Facebook
the
is in half.
The Nvidia story, everyone owned Nvidia too because it was such a good story. Everyone has computer screens. Everyone's using computers. You have to buy Nvidia for graphics.
Oh, and then they got everybody in it because of Bitcoin. They were
yeah.
They were the
Italian nerds
Bitcoin
too,
player,
right?
So
but anyway, I got you off your topic. You're talking about a fund manager who
it's just that all these managers have bought the dip, and I'm looking at like the marijuana stocks.
Right.
They're almost on a low of the year. I don't have CGC in front of me. Let me see. I'll pull it up.
So much for recession resistant.
But I was looking at that thing. It was in the 20s, down from like 60. Yeah, it's 25.30. The high of the year is 60. Tilray, everyone knows that story. It's trading at $69. The high of the year was 300. So you don't think that there's pain there? There's got to be just the most massive pain of life.
I know.
And everybody, and I mean everybody, is in Amazon. They don't realize they're long a $1,300 stock. They're freaking out. It's not even down that much compared to
And
everything
I like
else.
to harp on demographics, but you're actually touching three different demographics here. Apple are people with 401ks retiring. Amazon is millennial age frame, a little bit older. And when you talk about pot stocks, you're talking about, 20-year-olds. So it's like not only is every sector getting demolished, every demographic of investors getting demolished.
Yeah,
Brutal.
it's amazing. It's literally amazing out there, the carnage. And again, I'm gonna state what's different about this time than in the last time, which was a long time ago, over 10 years ago. This time, the stocks are actually getting murdered more than the futures, which is shocking because all of these people are talking about indexing and how that, Gunlock made that statement that everybody's basically indexed and, it's going to be a bloodbath. And really the truth is the indexes have, they're not holding up well, don't get me wrong, but they're holding up way better.
It's actually a concept of diversification being better than having a concentration.
Yeah. And Apple is got a lot of problems. Listen, there's a lot of stuff going on. There's total illiquidity today. The futures were just down 14. They're down 8. They're moving $5, $6, $7 on air. They want them up today badly. So if I was a trader in our chat, I'd be looking to get long pretty much at every level today. I don't think you run a major risk. I think that they're trying everything to bring it back. I'd be a better buyer of stocks.
I would think that we would start, if it is a thin market. I'm not debating that. But in a thin market, if you are, a plunge protection team type of trader, or an algo that trades in a thin market, you would think we would have started out higher to begin with. I'm just surprised that we're lower.
Well, this is the first lower day, and like every day we're higher. So at least this day we're lower.
I warned everyone to go fix about that. It's not as low as we want it to be, but look for the algo. I call it an algo, but we know that there's a buyer that comes in the morning. Look for that algo or that buyer to maybe it isn't all in one day. You know what I mean? Like maybe it's one day it comes in down 20, one day it comes in down 10, and then the last day it comes in down 40, and then we rally.
But I think the market's got issues in the sense that there's only 3 full trading days left in the year. People coming into the month, this is the crazy stat. The market was up. It wasn't down. So the whole down in the market is just this month. So a lot of people probably didn't tax sell. They've probably basically sat around, and now they're getting calls, to make moves. But I will tell you, this is the most illiquid I've ever seen the S&P. I'm watching it's down 11, then it's down 4, then it's down 6, then it's down 14, then it's legitimately illiquid. There's nothing in this market. Zero.
Guys, I have to go on mute. I have a child-related thing to deal with. I'm sorry, but I'm still here. I am listening. I want to learn more about stocks versus indices because, frankly, I don't know how you're handicapping stocks with the market closed, but I'm going to put myself on mute for a second.
And this is wild. I'm just watching the market flip up and down 10 handles at a crack.
What do you think on, I guess the thought is tax loss selling, getting ready for next year, things of that nature. That's affecting the market as well.
I think that may affect the market, but I think it's more liquidation. People don't know where they stand. There are people going to pull money late. There are people that have to get in line. There's people that have managed accounts that are getting pulled. People might have waited late to make moves. This is not good. But again, we have not seen the panic. There has not been panic on this move. So I would think that you want to see some panic moving forward. So that's what I would say. But as far as tax selling and whatnot, you don't realize that there's not a lot of time left and nobody had losses. So it'll be interesting to see if there is more selling coming to the market.
When you say there has not been panic, some will say last week the S&P was down nearly 10%, or Nasdaq was down. Russell was. That was panic.
What was panic? It went down 2% a day, every day. It's not panic.
Okay, so
panic is
you want like a 6%
well,
down day.
you would want to see a panic. I think you've been trading long enough to know what a panic looks. A panic looks like, holy cow, there's no bid. What the hell's going on? You're calling around, figuring out what to do. Everything has been totally liquid on this down move, from what I see. Maybe I'm wrong. It's been liquid. If you want to sell Apple right now, the bid offer is 5 cents wide, whatever you want to do. And I think on Friday we did record volume. So there's buyers and there's sellers, and I'd like to see a little bit of panic in the street. We haven't seen that yet. Volatility keeps ticking up and up and up, but it's interesting to watch the futures today. Is actually it's unbelievable.
On a day like today, are there any levels you'd look at, or would you just say stay away from the market because there's so many other forces?
I wouldn't trade today unless you had an opinion that you're willing to stick in for significant time, which would be more than just today. Because if you buy them right now at 2,400, you could make 15 handles quick, or you could be out 15 handles quick. There's no liquidity. Like I keep saying,
I see the straddle's trading 31 right now, and that's for 1 o'clock close.
I know it's going to be wild today, but I do think you're going to see margin selling at some point today. So maybe I think that comes at 10, 10:30, 11. I think maybe you could buy after that into the close, but you might see a lot of more tax selling coming at the end of the week. And again, there's only a half day Monday, so really there's 3 full trading days this week, and the markets look very skittish. I will say this. I know CNBC has been, touching on this every single day, that this is, if we're down 13 or 14%, it'll be the worst December in history. I don't know really what that means, but they're saying the last time was the Great Depression. But as far as months, this is actually, if
Hey,
we're
Larry?
down, yes, sir.
I know you. I'm going to let you finish, but I'm going to direct yours and Mike's attention to the screen. Coincidentally, I put up a chart that shows where we are off 52-week highs, because you're talking about as the worst December. Take a look at that while you're talking about it, because it's totally related. And the stocks that you've been focusing on are highlighted for you.
I appreciate that. Yeah, so what I'd like to say is, this is actually, if we're down another couple of percent, it'll be in potentially the top 15 worst down months in history. So that's pretty telling. And I don't know how you bounce out of that, but again, this is a new realm and a new market with new rigs and triggers and computers, so they could do anything they want. But my thought is we're going out on the dead low of whatever that is on Friday, and then into Monday maybe they try to save them. But cash is coming out of this market in a big way. We've seen it over the last couple of weeks. Mike can tell you, we're getting looks from the floor of big stock for sale, anywhere from $1 billion to $3 billion every single day. So somebody is getting out of Dodge pretty quickly. So maybe they'll buy back in. But these stocks don't look good. I'm looking at them again now. The futures are down 15, which is a little bit more in line with the stocks. It probably should even be lower. These stocks are getting hit. They're getting hit hard. So Amazon's going to be in liquidation. Everybody's long Amazon. I had a guy in my office. He was up $1 million in Amazon options, and he didn't take the profit, and now they're worthless. Yeah. So you got to be nimble. You can't. Amazon's not free money anymore. You can't buy options that are 100, 200 points out of the money for $100. That's what everybody does. They pay $100 for options that are 100 points out of the money, and the stock moves. It's moving 100 a day. So when you get that 100-point move, you make a fortune. But I would be very leery. The market's whipping around here. It's trading around 2,400, which is lower than where anybody would have thought it would have been. These markets are getting hit. I think the only market in Europe that's open is the FTSE.
Yeah, DAX is definitely closed for Christmas Eve.
And DAX is down pretty good. I mean, the FTSE, I'm sorry, is down pretty good today, about 1%, closing or on the year lows. So there's a lot of inherent pain. The Nikkei's pricing was this morning, I don't know if it bounced 300 points lower again. So that market's in double-digit correction territory. I mean, it's in a bear market from the high, but it's down double digits now for the year. All the, China's down 25. It's interesting. We didn't realize kind of how right on we were, but every day we were sitting here going, the S&P is unchanged and the DAX is down 15. Well, now the DAX is down 17 or 18 and we're down 12. So that thing will keep narrowing. We've got issues. We haven't even talked about the issues of the government shutdown. The government is shut down. It doesn't appear to be coming open at any point in time. And I'm not an expert in any way on what that means, but I was at the public park here playing basketball yesterday, and there were people working, and I'm wondering if they're getting paid. They might be showing up because they have to get paid when it reopens. But I don't know how all that works. But as the weeks roll on, I don't think it bodes well to not get a paycheck for people. So that can't be good. I think Mattis is leaving early. Is that I think Trump actually fired him after he quit and said, you don't have to stay till February. You're out in 5 days. So he's out in 5 days. There's chaos over there. And if I was a fly on the wall, I'm sure Trump is walking around that place freaking out because he wants to be playing golf where we are 70 and sunny and not a cloud in the sky. So I don't think when Melania is calling him going, we're going swimming today, he's very pleased with what's going on in Washington. And I don't see that ending anytime soon. And until we have that real panic, listen, we could have rallies for sure. I'm not saying that we can't, but until we have that real panic down, we're just going to keep melting lower and lower and lower. And again, today is Christmas Eve, half a day. If they can't pull an update today, I don't see how they're getting an update any day for the rest of the year. It just doesn't seem like it's going to happen. And these stocks, if you look at them, they're literally, when are people going to sell? Never. I mean, that is the mantra, by the way. Anyone I spoke to over the weekend, they're like, I'm not selling. No matter what, I'm not selling. Well, when are you going to sell NVIDIA? And I can easily tell you NVIDIA is not getting to the high again in this cycle. Okay? It's not going up $175 anytime on a $125 stock. All of these stocks, Apple, I'm not saying it can't trade an all-time high. It's extremely doubtful that we're going to get that in the next couple of years. It might trade lower than where Buffett made his original buys before it trades a new high. So that is what I see. I don't, gold's trading well. The bonds are in the stratosphere. I think yields are down to like 273 or 270 something on the 10-year.
10-year's 278.
278. It's crazy. The bottom line is that everything's been reversed. But again, today is not a day that you really want to stick your toe in the water. You can buy them here, I think, for a trade, but you could get just destroyed. And I'd like to see them down a lot more than this to look to buy. And again, they may want to set records this month, so you got to be careful of that, as this might be the worst month in history for December. We're pretty close to that. We're a couple of percent or 1% away from that. We're in the top 20 biggest down months in history in the market. It only takes another percent or two to get us in the top 15 to top 10. So we're in a spot where records are going to be broken, and that's not a good record for the longs. So people are going to go out this year thinking that this isn't free money or easy money. And it's interesting, if you look at Facebook, we haven't been here like from the first time it took off. It took off from like 120 or 110. We're back down there. So if you bought it 2 years ago, you're down money. That's interesting. And Apple is kind of back into the range where it was. I know we were here earlier this year, but we've been, here 2 years ago, 3 years ago. So we're at levels that we haven't seen. Goldman Sachs, I don't know when we were here last, but it's years ago. So they've taken years out of the market. They haven't taken it out on the S&P, but they've taken it out on a lot of these individual names. So, we'll see. Again, the market's just whipping around at 2,400 up and down, but these stocks are wounded. But again, you can get a Houdini where they open them here and then there's nobody selling because they sold, or it could be there's waves of selling at 10 or 11 o'clock. So I don't really know how to play it. I don't expect to do much today. It's a half a day on not a great month for us. The volatility index is above 31. It's up 4% now. And like Mike said before, the straddle's $30. So that's pretty good for the 2,400 straddle being $30 in a half a day.
A year ago, okay, I wonder what the straddle was a year ago today. I'm going to say $5.50.
Exactly. We were trading it. We know it was like $1 on it. They wanted to sell it at like zero.
5 and 5.5 right now.
I think we went off. Can you hear?
So.
Oh, they can. I can't hear myself.
I bid at 5.5, and right now we're 31 at 32.
and it's not a sale. It was a sale at 5. It's definitely not a sale at 31. 31. We're going to be at 23.50 in an hour. Who knows? But there are no buyers of stocks. The sellers are in control. Apple is ticking lower as we speak, below 149. Facebook is 122. It's unbelievable. It's actually unbelievable. And I don't think that the general public is looking at what's going on. It's funny. I got a quick funny. So I have guys that sit next to us in the building, and they are asset managers for a regional brokerage. And this is a true story, and Mike knows this is true. So I see them before this whole month starts. I go, how you guys doing? They're like, we're down 5 to 7. We have international exposure. And now I see them. The market's down 13. I go, how you guys doing? We're down 5 to 7. I'm like, are you sure? So it didn't matter that the market sold off 13%. Everybody's still down 5 to 7. So I don't believe that people understand or are aware of how much the markets are down. They're down significant numbers here. And, it's going to be interesting. Today will be very choppy. I do think there might be an opportunity to buy into some selling at around 10:30. I would not look to buy in here, although you can make a quick 10 handles. They want the market up today. They will do whatever it takes to try to get this thing up. So we will keep our eye on it. Gold is up on a breakout pretty much here. It looks like the higher levels. Oil is a pig at $44.90, down from $77 2 months ago. So it's almost literally in half. But looking at stocks across the board, they're not looking so strong. So I expect to see some selling at the 10:30 area, 11 into margin call and tax selling. But we will see. Everybody is long Apple and Amazon, just so you know. Everyone that I ran into this weekend. So that being said, I would be leery on those names. Those people will not sell, but maybe hedge funds will. Other than that, I don't see much here. Like Mike said, the straddle is 31. It might be a short for the faint of heart. S&P is rallying again, so it's above the figure. But overall, markets look a little bit weak. But I think people are going to try to buy it this morning, and we'll see if it can hold. Do we have anybody any scheduled today?
No, we'll just be back on a few times with some updates.
everybody's on vacation in Hawaii, so we will not have people on other than myself. I will be manning the desk today, so we will be back to you after the opening. But we're leaving you with the S&P down 1150, which is not really much. Stocks are lower. Apple actually is bouncing a little, so some of the stocks are bouncing a little, but overall it doesn't look good, and I'd like to see some selling around 10:30, 11, then maybe look to buy, and that's the game plan from here. But I will tell you they're down 10 now. You could see them down 3 in 30 seconds or down 15 in 30 seconds, so that's the market we're in. But stocks are skittish, and we'll wait to see how we open, and I wish everybody luck. Keep an eye on the bond market. I think it might be a short in here. And that's it. Everybody have a great holiday and a great day, and we'll be back to you after the opening. Take care.